numbers, and we have Mangalam Malu joining us now to decode those numbers for us. Mangalam, how is it looking?
Well, the numbers aren't looking particularly bad. In fact, they are largely in line with street expectations. The revenues have actually grown a tad better than street expectations. The company's revenues have grown by about a little over 16% odd, 16.3%. The street was working with a 13.5% sort of revenue growth coming in for the company this time around. I'm just looking at their EBITDA as well. 3,537 crores is a little better than street expectations. In fact, the street was working with a number of around 3,500 odd crores. So there has been a mild beat on the EBITDA as well. Margins 23.2%. The street was working with a 23.6% sort of number. We have seen an improvement, quarter on quarter by about 30 basis points. But at the same time, year on year, it is a mild decline. But that was, again, on expected lines. Importantly, the volume growth of the company has come in at 5%, which again is largely in line, but mildly on the higher side as against street expectations of 4 to 5%. They've come in at close to 5%. If I take a look at their home care business, that's grown in excess of 20%. That's a positive. Beauty and personal care too has grown in double digits. That's a positive as well. And foods and refreshments is another business which has grown well for them. So those are a couple of factors which stand out to be mildly better than expectations. So overall, these numbers, while they look good, the higher end of expectations, they are, something that the street will like. Importantly, I'm just looking at the management commentary out here, and they say that they've hit yet another quarter of solid all-round performance, delivering double-digit revenue and earnings growth. Looking forward, they're cautiously optimistic in the near term, but importantly, they believe that the worst of inflation is behind the company. This should aid in gradual recovery of consumer demand. They remain focused on managing their business, of course, with agility, growing their consumer franchise. And they are, the management commentary also is cautiously optimistic, saying that inflation is the worst of inflation is behind them. So that is something that the street will like. The stock was largely lower in today's trading session, ahead of the numbers. In fact, was down 2.5 odd percent. It's corrected about 7.5% from the highs. So let's see whether the street will be positively surprised by this performance or not. But if you've just joined in, let me tell you, HUL in the third quarter has reported a turnover growth or revenue growth of 16%. Street was working with a number of 13.5%. The volume growth has come in at around 5%. Street, again, was working with a number of anywhere between 4 to 5 odd percent. And the net profit for HUL this time around has grown 12%. The street was working with a number of a 10% growth out there. Home care delivered a 32% growth. Beauty and personal care grew 10%, whereas food and refreshment grew by about 7%, led by robust performance in foods, coffee, as well as ice cream. The important part to watch out for now is how the demand situation is panning out, and at the same time how the company plans to scale up the recent acquisitions that it made. We have with us Amnish Aggarwal of Prabhudas Lilladher joining in to decode these earnings. Amnish, how do you read these numbers, especially the 16% revenue growth, 5% volume growth, and the fact that the management says that the worst of inflation is behind them?
As the numbers are broadly in line, we are working with 4.5% volume growth and roughly around, say, 15% top line growth. So I think numbers are good, broadly in line. And again, as has been happening, it has been led by strong performance in the home care, while personal care and food, they are tepid. I think as far as your margins are concerned, I think the commentaries are very clearly visible even in the past, because your palm oil prices have come off the highs, even packaging and crude are down. I think the worst of inflation is definitely over, and as we go along, I think the margin expansion on a YOY basis also should set in for within a quarter or so.
Right. Amnish, there is another important, announcement that has come by as well. The board of directors of Hindustan Unilever have approved the proposal to enter a new arrangement with Unilever group entities for the provision of royalty that they give to them. That royalty, which was 2.65% in FY22, has increased to 3.45% of the turnover. This will be effected in a staggered manner over a period of 3 years. We need to know the glide path for that. But, this is something that the street may not like. In fact, now it turns out to be that the numbers have become a bit of a sideshow. The other announcement that has come by, the increase in royalty to the parent, Unilever that is, will come in from 2.65% of the turnover to around 3.45% over the next 3 years. How do you view this? Because, this clearly eats into the margins going forward.
Yeah, you see, the increase is roughly, you can say, 80 bips over a period of 3 years. Okay, but more importantly, one has to look at in, I would say, two phases to it. One being that if you look at the categories like personal care or home care, where lever is today is because of the technology strength which it gets from the parent. Okay, so that clearly is an advantage. But if you look at the recent acquisitions, whether it is Indulekha, whether it is Oziva or some of the other, you can say, acquisitions, they are not entirely dependent on the technology of the parent. So I think in this scenario, when we already are witnessing a situation that because Street earlier was even expecting their margins to go to 25, 26% kind of a number. I think in this scenario, I think with 80 bips royalty increase over the next 3 years, there definitely the incremental margin expansion from here on will definitely be hit to some extent. And the state will obviously not take it very positively.
Exactly. That's the important point that you've made out there. The street will not take that point positively. The numbers are broadly in line, mildly better than expectations. But the joker in the pack has been this announcement of increase in royalty. Thanks a lot, Amnish, for joining in. We will shortly be joined by the management as well, who will detail the quarter gone by. And we'll obviously quiz them about this royalty change too. But for now, the word on HUL is that the results largely in line, mildly better than expectations, but the joker in the pack is the royalty, which the street will not like. The royalty for HUL, the royalty that it pays to Unilever, will increase from 2.65% to 3.45% of sales over the next 3 years. Back to you.
All right, so numbers not looking bad there, mildly better than expectations. Thank you so much for those details.